See, welcome everybody. Welcome to the Building Doctor Show. I'm your host, Jens Johansson. And I was thinking, just as we were starting, our show is always the last Tuesday of the month. And I looked up at the calendar and we've had 5 Tuesdays. That's why I feel like I'm behind. It's the 5th Tuesday. I've missed you guys. It's been an extra week. The December show was recorded. So yeah, it's good to be back. And today's guest, we have Matt Martin. Happy New Year, Matt.
Thank you, sir. Happy New Year to you also.
Yeah, it's kind of the last day we can say that because you start saying that in February and people go, yeah, come on, man, get over it. It's
Take your Christmas lights down, that kind of stuff.
Take the Christmas tree light down. So today is all about insurance, and Matt is an expert in the insurance business. He's here today and wearing his consultant hat as opposed to his name brand thing, because there's the insurance business is regulated. There's rules about doing these kind of shows and giving these kinds of opinions. So he's going to stay clean, but we'll get more into him just in a second. But we're going to be working on unit policies versus master policies, and how they differ and what to watch out for and how to use your insurance appropriately, how to set up a good insurance policy, and what to look for, comparing it to your bylaws and what kind of buildings you live in. And so we're hopeful that this webinar will provide some valuable insights and guidance about protecting your property. So, Matt, tell us a little bit about yourself.
Well, thanks for the opportunity, Jens. I have been in the industry for a little over 33 years, underwriting, claims, and now on the sales side or the agency side for 23.
Okay.
So I've been around a long time and have seen crazy stuff and seen stuff go very smoothly.
Yep.
But the crazy ones are way more exciting to talk about. So
Yeah, were those more in the claim side of the thing, where you're showing up at a burned out house, or what's the most crazy?
Yeah, I told you some time ago I was held at gunpoint on an auto claim once. I visited lots of fires and this and that, and so yeah, it's been an adventure. Whoever said insurance people are boring, insurance policies are boring. Insurance people are not boring. So
yeah, insurance policies. When you can't sleep, get out your insurance policy and just cures everything. So
you stole that from me. As if you're an insomniac, get your policy out. You'll be asleep or dead shortly. So
awesome. And so then you went to the agency. Did you start right out of school, or it sounds like you've been doing it for a while? And
I did. I graduated from Oregon State, and about 2 weeks later, I was a claim rep for this company. And while I was in school, I did some internships on the underwriting side of things, and so got a pretty good picture of the industry. And I love the ability to be able to help my clients, learn how to play the game, if you will.
Yeah. Well, that's what we're here to learn. So that's good. I was curious about how much time you spend in claims and then underwriting. I'd much rather be on the agency side, because it seems like a customer client service piece there. And one more thing, you're licensed in Washington. Our show is targeting Washington, Oregon, Utah. And insurance is one of those things where it's definitely rule and policy related. And so we just wanted to emphasize that every policy is a little different, but the concepts we're going to be talking about today hopefully should apply throughout.
Correct.
And so, yeah. Okay. So I've launched a little poll. This is the normal poll we do. It helps us know where you're from and how you're involved in condominiums. How you found us a little bit. I'll let that run just a little bit more. But just we've thinned down the opening monologue, but we don't want to forget the disclaimers. This show is free, so put away your credit cards. We're not selling you anything. And this show is for educational content only. We're not giving legal, financial, engineering advice, and we're not medical doctors, even though it's the Building Doctor Show. We've helped thousands of people with their building problems and seen what has worked and what hasn't. And we want to make sure that you benefit from what we're talking about today. So feel free to ask any of those questions in the Q&A, and Brooke, the producer, will get those things going for us. Our registration on this show continues to climb. So thanks for spreading the news, and feel free to share that news with the rest of your board and just get that information out there. So we're here to help. So let's go back to the poll. Let's see who's here. There's a good, well, there's Washington, Oregon represented. So, the mighty Beavers in Oregon.
Go Beavs.
Go Beavs is our well represented. Managers, board members, homeowners. Let's see, end poll. I can share it for you guys too. And so we've got lots of things going on. Have you been through a repair project? Yes, a big one. And insurance was probably had something to do there. Okay, let's see. So stick around for the live Q&A at the end. This is a live show. You are invited. You are asked to enter your questions. Put them up in the Q&A box, and we will get to that. One of the questions that we receive questions all month. And so we got a really good question that really kind of drove this show. We knew we wanted to talk about insurance, and we got a great question this month, and we'll get to that. But it's a nice complicated question. But when we're moving through here, let's see, we'll get that Q&A panel at the end of the show. We'll also be doing our raffle giveaways. We have, we keep getting asked for J2 Brew when it runs out, energizing your communities since 2007. And, it's cold here. So we got a beanie. We got a little, I guess you could put coffee in this. You could put whatever kind of beverage in that. So there's a giveaway there. Matt, do you have your little prizes?
I have these lovely blankets. I've got two of them, one this color and one this color. Basically, if happen to be in a band, and if you happen to come see my band this summer in Mukilteo, you could spread that blanket out on the ground and sit comfortably while you listen to music.
Fantastic. What position do you play in the band? Do you say position? That's more sports team.
You ask how you want. It's all good. I'm the drummer and the lead singer of the band. So
very Don Henley of you. Yes.
Wow.
That takes a lot of talent.
Good for you.
Because the drum is hard. You're either ahead of the beat, you're behind the beat, you're on the off beat, you're with the beat, that's hard.
I can't walk and chew gum at the same time, so I don't know how I do that. So it remains to be seen.
Let's rock some insurance policies.
Right, exactly. Oh gosh.
Oh, it's going to be a long show, folks. Okay, so we had today's agenda. Here's where we cover the agenda questions real quick, and then we jump into it. So we had a fire in our condo. Nobody wants to take the lead on insurance claims. And that's really this kind of hairy question. It affected a bunch of units. How do we get to herd the cats? Who's in charge? Number two, what should we expect as the typical insurance policy, and what kind of things are included or not? And we're going to talk unit policy and master policy and the differences, because we see things fall between the cracks. And so we want to make sure that you're protected on that. What do we do in the case of a claim? What are some good, just call 1-800-CLAIMS, so. Number four, if there's a loss, should everyone call their insurance companies? And do we get penalized for turning in a claim? How do we avoid contractors who want to take advantage of us, that listen to the police scanner and show up and push their way in the door? And is there anybody else that, public adjusters maybe? So. Number six, what is the difference between a unit policy and a master policy, and who owns what? Number seven, what do I do if my toilet flooded and damaged other units? So you can kind of see some of these questions they're related, and we'll break them down there. And if we come to it and we've already answered it, we'll just keep going. So number eight, what happens if someone does a bad window replacement? What happens if somebody installs windows poorly that cause damage to other units? What is D&O insurance, and should I get it? And then what does an HO6 assessment insurance protect me from? So one more thing, Matt, do you live in a condo? Do you serve on a board? What, you said
Um,
something about a
I,
condo.
yes, I currently I'm currently renting a condo.
Okay,
Um, but I own a house on a lake nearby, and there is an
mhm,
association. I
okay,
have served on many homeowners association boards. In fact, I
mhm,
serve on our marina board right now and our HOA board right now.
okay,
So, and I've been doing it, and I've met with numerous dozens and dozens of condo association boards and HOA boards in the
right.
last 23 years of doing this. So.
Yep, yep. So you can speak to our audience of board members, managers, and association members. So here's that question. It's this month's best question. We actually gave them a coffee or something like that, saying, thanks for asking this. This is a really good one in the sense of it's messy, it needs to be unpacked. And so I'm not going to read the whole question, but basically we have a large HOA, had a fire in one of its buildings, destroyed 4 units, damaged 4 others, probably damaged hallways and elevator lobbies and all this other stuff. And the plumber did it, and he confessed, and he has insurance, but um, there's all these policies, and nobody's really stepping up to take charge. All the policies in each unit are saying, I'll pay as soon as you give me some bills, or as soon as you send me some things, I'll gladly pay you. But nobody is being the clerk of the works or the quarterback and coordinating and getting these things moving and getting people back into their house. Meanwhile, their ALE or their additional living expense clock is ticking, and there's just a lot of frustration. And so the question ends with, surely your insurance industry must have some protocol or well-recognized standard practice for how they all interact with each other. I wish they did, but that's what good agents are for, and we'll talk about that, but also good HOA attorneys and consultants or quarterbacking kind of project managers that can make things happen. So we're going to break this question down through a series of other questions, but you can see the mess sounds complicated, and let's take it away. So let's talk about the typical insurance policy. And this is 5 bullets. And then, using the lens of unit policy versus master policy. When we were talking about this show early on, Matt mentioned some, here, this particular line item is a no-brainer to get, upgrades on. So increase that from $1,000 to $10,000. It's only $15 a month or something. Next question, is there a difference on the type of building I live in? High rise versus low rise, new, old, pools, etc. Third one, what are some things to watch out for? I guess, on unit policies. What are things included, but only a small amount of coverage? And then the last one, should we or our agent review the master policy and then shape our unit policy around that? And maybe it's more bylaws, or maybe it's both. So Matt, this is all you. Take it away.
Well, again, thanks for the opportunity today, gents. In as much as we talked earlier, I think I usually refer to the relationship between a condo unit owner's policy and a master policy as kind of a dance when it comes to claim time. And really, I won't go in necessarily order here, but the if you're in a management company or you're on the board, the thing I'll stress first is, in my experience, is the bylaws are going to be so incredibly important, and how they are written and how they describe, obviously in writing, who is responsible for what. And I mean down to the minutia, because when it comes time and the rubber meets the road and it's claim time, both of you, all 3 of you, the unit owner, the board member, and the management company, will be so pleased when they see that it is spelled out so incredibly clear that who is responsible for what. So
So you're almost advocating an insurance paragraph for an insurance. Here's what to do in case of a insurance claim. Is that
Absolutely. I'm
okay?
absolutely saying, and really the other thing too is defining, I saw a slide earlier, who owns what? The
Right.
bylaws will define who owns, so some common knowledge, those of you that are listening, you've read or heard this before. The unit owner is responsible for from the drywall in. Well, is that enough of a definition to, come claim time? What about the plumbing that services their condo unit? That's inside the wall, but it services their unit. So do they own it? I don't
Right.
know. What about the windows? Windows are structural.
Mhm.
If they break a window, so we'll get into that one a little bit later. I always start with that is I ask my customers who buy a condo unit owner's policy, I ask them to bring me a copy of the bylaws and the master policy. And as a courtesy, I will review it and say, all right. And that's how, to your point, that's how we'll design their HO6 policy or their unit owner's policy to work in concert with the master policy. Now, that's a
Yeah.
30,000 foot view,
Right.
but at the end of the day, it's sort of like, surprise, an insurance policy. They tried to take the gray out of everything and make it black and white.
Right.
And that's where the bylaws will come in. So all that said, what are some good upgrades that you can do on like an HO6 policy? We'll
Mhm.
we'll dig into this later, but things like loss assessment coverage, and we'll dig
Mhm.
into that. Later on. I saw another slide earlier. Backup of sewer and drain, earthquake coverage, those kinds of things. In the state of Washington, all these policies are pretty vanilla. That means they're all
Mhm.
pretty much the same. The
Mhm.
biggest differences are going to be the premium that's charged, the service that you get, and the options and endorsements that are available.
Mhm.
Otherwise, most of the policy language is the same because it has to be uniform so that the OIC, the insurance commissioner's office, can regulate that to the best of their ability.
So there is uniformity among different brands, but then
Absolutely.
what you're saying is a good agent or advisor is filling in where they need to cover the cracks, if you will.
Yeah. And,
Okay.
and at the end of the day, and again, philosophically, and it should be a mainstream thing, and I'll be quickly about this, but your insurance company's job is to protect you,
Mhm.
protect your stuff, protect you from liability issues, and so forth and so on. So having a person to advocate for you, like a local agent, like whoever, that's important because again, when it's time for a claim, you need someone that's able to dig in and talk to these other companies, like go
Mhm.
back to your big thing. If there's 7 insurance companies involved, then there's the question of the board. Does the board assign someone to be the quarterback? Say, look, you're responsible for talking to all these different places, blah, blah, blah.
Right.
But having that advocacy is really important in this business. And I gave you the example earlier. When I go and get a mortgage, I say to my guy, "Hey, this is what I want. Now make it happen." I don't, I don't know anything about mortgages other than, I just say, "Hey, make this happen." He's the
Right.
expert.
Okay. One thing that we were talking about in a unit policy, and I think you used the scenario of if you can grab your unit like a box and tip it over and shake it and what falls out.
Yep.
Can you talk about that? Because
Yeah.
some stuff
So
will fall out. Most other
yeah,
stuff
right.
won't.
Right. So the HO6, that's what they call it in Washington. I don't know what they call it in Oregon or Utah, but the condo unit owner's policy, I call it is a renter's policy on crack. That just
Mm.
means that there's 3 major things covered. A, your stuff. That's
Mhm.
technical jargon for contents. And
Right.
that's where, like you said, if you pick up the place and turn it upside down and shake it, whatever falls out is considered your stuff or your contents.
Okay.
The other thing that's covered is building coverage. So I mentioned earlier, drywall in, everything that's bolted to the structure or stapled to the structure like carpeting or whatever. If it doesn't
Cabinets.
fall, exactly, cabinetry, toilets, countertops, light
Mhm.
fixtures, all that stuff that doesn't fall out but is still inside the drywall, that's considered building property. That's the
Okay.
second thing that's covered. We got stuff, we got building property, and then of course liability. And
Gotcha.
so that's really, and then you've got 1,000 other things you can tack on there.
Okay.
But those are the
Good.
big 3 that are covered.
And so to help people understand one easier way to think about it, insurance policies may be vanilla, or they may be kind of, if it's not excluded, it's included. So there's kind of this vagueness, but they're really a contract. They're a contract to do A, B, and C. And
That's
then,
right.
then you jump over to your bylaws. Those are kind of also a contract that the common areas are going to do this, this, and this, and you as residents are going to do that, that, and that. And so you got to get these two contracts lining up so that you get coverage for things, because we've seen it, and it's sad when it's like there's a big gap right in the middle of this, because that app you went to save, $50 on your insurance policy doesn't provide any kind of, anyway, don't
Right.
get me,
Yeah.
don't get me down that line, but
I get
yeah,
it. I
okay.
get it.
So your point is, yeah, get some advocacy there. Okay.
Yep.
And look at the bylaws and look at the master. Okay, great. So let's go to insurance claim process. What, kind of a simple question. What should I do if something happens? And what should I expect my carrier to do for a typical unit condo policy? And so what do I do if something happens? So that kind of gets into that, that the question or the pushback we hear is, it was obviously your toilet that flooded above me and flooded my entire unit. If I call my insurance company, I might have to pay a deductible, or I get dinged for a claim. So you call your insurance company. Yeah. Should everybody call their insurance company, or what are pretty typical things to do?
So I like the example, and this is undoubtedly, this is what I and my team, I've instructed them the same as somebody calls using your example. You live above me and your toilet leaks into my unit. I'm of the feeling, and it's the same thing with insurance, I feel that insurance companies could do. The first thing that I'm going to do is come knock on your door and say, hey, Jens, this has happened. How are you going to handle this? And then if that doesn't work, then hopefully you have, as a unit owner, a local representative that you can call. And I act as a gatekeeper between my person and the big bad company. And then and the reason I say that is because the minute you call 1-800 don't have a claim, you're gonna, like you said earlier, you're gonna have a ding on your record, whether $1 is paid out or not. There's now a record of a loss. And so you want to make sure that, because in this case, if I were the agent, I would say, look, go talk to Jens and see what's going on, and see, does his policy have coverage for that? And then the other thing is, if it leaked down through the flooring, now you've got an issue where stuff that neither of you or your insurance policies cover. So you got to get in hold of the association as well and say, hey, there's wet drywall or flooring, there's wet insulation. I could, how are you guys going to handle this? Is it,
Gotcha.
most of the associations have a really high deductible these days for a whole lot of reasons,
Obvious
but
reasons.
they should have reserves set.
You
should have reserves for stuff like
good
this.
point.
You know what I mean? And
did show not too long ago specifically on reserve studies, and having an insurance deductible line item, basically that's something, because we hear it. I mean, it used to be $5,000 for a big giant complex, and now it's 50,000.
Right.
So do we have that in the bank?
Yeah.
Okay.
And we'll touch on that again when we get to assessments. But yeah.
Okay. What should my carrier do? My carrier should start paying attention, come out and take a look at it, or do what they do and
advocate for you. Ask them, that your carrier, whether it's the master policy carrier and you're talking to the president of the association or the property management company, or whether it's the unit owner's carrier, they need to dig in. This is the time where it's important. Like I said the other day, hey, we're really nice people. We sell insurance and we're really nice, but who cares how nice we are if we're not getting the love that we need from our carrier when you have a claim?
Right. And, back to that, what are you going to do about this? Maybe that's a little bit of a business decision? Hey, it's a spot in my ceiling. Hey, don't call my company. My deductible's $5,000. If it's less than $5,000, I'll just take care of it for you.
Absolutely.
Is that another place?
Absolutely. Yeah, totally. Okay. Yeah. Okay. Do the right, do what makes sense financially too. I mean, right.
Okay.
So,
all right. Well, good answer. And here we've got fire billowing out of the thing. Multiple unit policies. And this kind of gets back to that question of, what is the best protocol or the best practices or standard steps to handle a loss that affects a bunch of units? Should we make all involved call their insurance company? Here's that question. We get pushback from owners, hey, it wasn't my unit that burned, but that smoke got into my unit, or the water that was putting this fire out got into my unit. And so aside from calling 911 to get out of a burning building, what what's kind of and this is advice to boards with multiple unit policies involved here.
Yeah.
What is that board president just immediately saying? Everybody get their, insurance companies involved, or what?
Well, I think in it, I wish there was a yes, no, black, white answer for
Okay.
this question, but there really isn't. So what should the president of the association do immediately? First of all, talk to everybody involved. If it's 4 units that are involved, hey, what kind of damage do we have? Maybe even do an inspection and find out. And again, it boils down to economics with some people too, is can you afford a $2,000 bill to get the smoke damage out of your house? If you don't want to or can't, then you involve your insurance company. And then there's the issue of, we talked about this earlier, subrogation. If somebody upstairs, fell asleep and there was popcorn oil, that was a real claim, popcorn oil on their stove, and it blew up and burned the whole building down.
Oh, geez.
There's some legal liability there. And so if it's a fourplex and 4 insurance companies are involved, they're going to want their money back. And so hopefully the unit owner has, a good liability policy with their owners and policy, and go from there. But it's immediately, if in a situation like this, I would involve the master policy immediately and let them know, hey, we've got a significant claim here, and it's affected, say 4 or 8 of 20 units or something like that, because there's going to be significant damage there. And then all the players need to get involved. Again, if you're the president of the association, either you assign someone to quarterback this thing. I want you to call everybody or call all the unit owners that it's affected. And maybe there's one of the 8 that has a tiny little water spot, like you said, but the rest of them, so there is no one size fits all answer to this. I wish I could be more clear. There's just not. It's all situational and depends on what's happening.
And I think the reach out, make the calls, and get a plan going, whether that's, somebody needs to be doing the plan. And I think that goes back to that question. And this gets back to how I originally got in the business. There was a 17th floor condominium downtown, fire sprinkler pipe blew, flooded all 17 floors. And all of a sudden now we've got sprinkler guy, the master policy, 17 floors worth of unit owners. And there were meetings with lots of lawyers and lots of, kind of just talking about process of who's going to pay, who's participating, who isn't. They're being naughty. We need to send them notices and letters and make them do what they're supposed to do. So it turns into a big process there, but quarterbacking that is important.
Well, and we talked about this earlier, just real briefly. Again, your insurance company's job is to protect you. And if they're blowing you off and they're not playing fair with the other companies, they are not protecting you. Right. That is called bad faith, where I come from. You pay a premium, you expect to be taken care of. If they're not doing that, you can apply pressure. Call the insurance commissioner's office, call the attorney general's office, file a complaint, say, hey, my company is not helping me. And whatever that might be, like you said, if there's 8 insurance companies involved and one of them's not playing well, they got to step up and make sure they get it done.
And getting that documented to get the proof of what's going on. Yeah. It turns into a big pain.
Yes.
Okay. Next one, multiple unit policies. This is kind of that board question. How do we avoid getting taken advantage of by the ambulance chaser contractors? They shove a contract in my face and ask me to sign it. I mean, we've even seen the 3, it's like tow truck companies. I mean, 3 of them swoop in on the broken down vehicle and they kind of just bluff their way in there. Oh yeah, your insurance company sent me. sign here
Yeah.
and bill away. So what are good ways to kind of control that a little bit?
Yeah. In my experience, it's pay attention to the referrals.
Mhm.
And if some, I have an example. Two houses in my neighborhood burnt down the same day. And
Mm.
while one of them was still on fire, this public adjuster pulled up in his brand new Mercedes and said, "Hey, I'm here to help you," and
Mhm.
because I was there in the front yard writing the person a check so they can go buy underwear and toothbrushes and for the night since they had
Right,
nothing. And I said, get the hell out of here.
right.
Both of these people have insurance. They'll handle the claims. We're not paying you a fee. It's like I said, beat it. Nobody needs
Right.
you here. And by the way, how'd you hear about this? And so because nobody,
Yeah.
you know, anyway. So and then the other thing is if the management company, thank heavens for them, if they can make a referral and so when people start showing up, you say, "Hey, how'd you hear about this?" "Oh, well, it was our management company." "Oh, who'd you talk to?" I just do a little more exploratory
Right.
asking of questions that way, so that
Mm.
because you're right. They listen
Yeah.
to scanners. They'll show up and act like they own the place,
Mhm.
and it's not. I've seen it happen too many times.
Yep. Yep. Okay. All right. Is any of this sounding familiar? If it is, pick up the phone, give me a call, use your little QR code readers, scan in to get on that calendar and schedule 15 minutes. And we're happy to keep pointing you in the right direction. In this week, I can tell you war stories with boards and how they handle insurance, but for insurance stuff, I'm gonna punt you over to Matt and say, call
Hmm.
Matt, he can help you.
Hmm.
And so I hope you're getting some value out of there, but click on the calendar link and you can schedule some time. Matt will have one here soon. So stay tuned for that. Difference between the unit policy and the master policy, who owns what, whose insurance should cover what, is there language in each policy about what it covers or does not cover? And I think one of the questions that this gets to is the bylaws will say the common areas of the building, the studs, the framing, the floor joists, the insulation between the units, that's all owned by the association. But then we have insurance policies that are working between the drywall, so to speak. But then some, better insurance policies. Yeah, I'll cover everything. It was my guy's loss. Or other policies, they may say different things. So how do we filter that? How do we make sure that we have the right coverage? How do we make sure the right people are paying the right, look to them to do what they're supposed to do?
Yeah. Fair enough. So I'll start with the master policies, and not to get too far into the woods on the detail because there's so many details. But if the master policy is written correctly, and I mean that whoever is evaluating it actually goes out and looks at it and
Mhm.
measures the buildings and finds out that you have an elevator and two pools and a pool house and but so, my personal opinion is that if you're going to write it, you need to know what's there. So go out and do that. If the master policy is adequately the coverage amounts and all that stuff, that should be reviewed annually. And sometimes I won't get into a big deal with, but 10 years ago, um, a lot of companies, well, a few companies came out with what we call skeleton master policies, and they
Mm.
really are.
What
They
is that?
really, well, it's we call it an all-in policy versus a skeleton policy. The all-in policy basically says we cover everything in the building, and that means again we're going to go back to this everything from the drywall in. So if the bylaws don't state something to counter what the all-in policy says, then you have a contract. There's a contract between the insurance company and the association. So if the bylaws aren't clear, then
Mhm.
that master policy could be paying for everything, even
Right.
the furnishings in the building. So that's where the bylaws come in and kind of whittle that down and say, look, we just want to pay for, I call the superstructure. So if it's evaluated properly and it's reviewed annually, the master policy should be in great shape, have a high deductible, that's fine. And it should work in concert with the HO6 or the unit owner's policy, so
Mhm.
that if the owner has a claim or a loss that is confined to their unit and inside the drywall, there's no need for the master policy to get involved.
Right.
If the fire goes through the ceiling into the persons above them, then you potentially could have a unit owner's policy downstairs, a unit owner's policy upstairs, and the master policy to fix what's in between, as
Mhm.
long as the bylaws are specific about what's in between.
Okay.
So that's a 30,000-foot view, and you're going to hear this over and over again today. Bylaws, 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 bylaws.
Yeah.
Hire an attorney to sit down with an insurance person and make sure that all
Just
the I's are dotted and the
highlight the
T's are crossed.
differences.
Exactly.
Yeah.
Exactly. You'll, like
Yeah.
I said, when you're sitting in front of a judge at a bench trial or a jury, or you're doing a deposition, you will never be sorry that you spent the money to get the bylaws updated.
Yeah. Big time. Big time. So bylaws updated, and that brings up a question. I don't read a whole ton of them, but when I do, I see 30% of them were the original bylaws. And of course, they benefit the developer because the
course.
developer owns the units at the time, and they've never been updated. And it was before a computer was developed and the type spacing is just a hair off. And you're
Right.
like, holy moly, they hadn't even thought about multiple outlets in the bathroom yet. And so there's lots of bylaws. There's talk about skeleton. They don't even represent the right interests.
Sure.
And so we've had previous shows about that, but it's just, here is one more expert on the Building Doctor show telling you, hey, revisit that and just look at it and tighten it up. And this is something probably every 5 to 10 years that needs to be done. So it's not every year, not every policy, but
Right.
get a good. Do you ever see any boards being super proactive saying, hey, we've gone through this exercise. Here's what all of you residents should get.
Yeah, I wrote a association up in Whatcom County because I can't write him in King Pierce and Snohomish anymore. But I wrote one up there, and a year later I sat down with them and I read the thing cover to cover, and I said, here's what I would suggest. Within a month, all the changes were done.
Wow.
And they're
Fantastic.
like, okay. I mean, it's not a big one. It's probably, gosh, what is it? Oh, 20 units or something like that. So it
Okay.
wasn't huge, but
Mhm.
they were like, yeah, we don't want to be burdened with this if something
Right.
happens.
Right. Yep.
So,
Yep. It's time to do it now. Okay.
Yep.
Great. Deductibles, a big puddle of water. I can see it's not a floor fan, it's a ceiling fan, a reflection in the puddle. So we kind of talked about this. My toilet overflowed and flooded to 2 units under me. Who pays? Yeah, it was my toilet that flooded you, but it was his water that came through your floor. Because no, I'm joking. So
yeah.
kind of master deductibles, other unit deductibles, which policy steps up and takes charge? And you're back to that all in. Are we lucky when we happen to have an all in policy that just takes care of everything?
Yep. You
Okay.
are. You
Or
are.
unless
And
you
again,
design it.
yeah, no, it's very good to have an all-in policy as a master policy. But again, to keep prices down and things,
Mhm.
and so then the association then would definitely, again, make sure the bylaws are appropriate, have a high deductible so that you only use the master policy when it's a serious catastrophic claim.
Right.
That's why, I even suggested to this board up in Whatcom County, I said, hey, you need to make purchasing a condo and owning one here, that HO6 has to be mandated. And for a whole lot of reasons, liability and this and
Right.
that. And, and they did that. And all
Right.
but one person had it. And she's like, yeah, okay, it makes sense. But,
Okay.
with this particular kind of loss, there's 3 levels involved. Some insurance policies, depending on who the company is, if you have adequate limits of building coverage, remember
Mhm.
that's everything bolted to the
Right.
place. Sometimes your building coverage could pay for damage in your neighbor's below his place or her place. It just
Gotcha.
ask your agent, or whatever. But then again, if you're somehow negligent and the 2 people below you got wet, then then you might be involving your liability portion because their companies are going to come after you and say, yo, you left the house and the water was running. Why'd you
Right.
do that? That's negligence. You know what I mean? So,
Gotcha.
yeah.
Okay. Any spin on Airbnbs and stuff like that? So now we've got an active rental hotel operation going out of this particular unit. Got a lot of different tenants. We don't have a steady resident. We've got a business. We've got any
Yeah.
HO6 covers
Yeah.
that, or now do we as the association have to protect ourselves from these, short-term rentals?
Yeah. Yeah. Insurance companies historically are extremely slow to get on board with things like this.
Mhm.
And yes, 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 yes. Call your insurance company and make sure that if you're gonna do that, ask them, A, do I have coverage if I short-term lease my place?
Mhm.
B, if I don't, can I buy an endorsement through your company to get it done? Because you don't ever want to be in a situation where you're doing that,
Right.
you have a loss, and they say, oh, no, there's no coverage because of an exclusion. And it's not because they don't like you, it's because it's contractual. And
Right.
so this is new, not
Mhm.
new, but it's insurance companies are finally jumping on the bad way. They hate it because their care, custody, and control, that's insurance ease, is
Mhm.
not there. You got somebody staying at your place, a different person
Right.
once a month, and they
Or
hate
every
that.
night.
Yeah, because how do you underwrite? You don't know them. How do you underwrite for something like that? Well, they charge more. They put an
Right.
endorsement on there and say, yep, you can use the blah, blah, blah endorsement if you're going to Airbnb your place.
Okay. So any problems with denial of these claims? Because I can just see the thrifty investor not telling their insurance company that they've got this racket going on. And they've read their policy briefly because they watched Matt and Jens talk about them. They didn't see any exclusion there. So we're good. Just don't tell anybody.
Yeah,
Is there,
I
it gets
refer to that
gray
as
pretty fast?
it's Russian roulette is how I
Oh,
refer to
yeah.
that.
It's a technical term.
It's yeah, right. It's better. I always have a feeling is better to ask. Some people say, oh, I'll act now and apologize later. Well,
Mhm.
you have an insurance contract that you need to be mindful of, and if there's an
Right.
exclusion in there, that's just ugly. And so
Right.
do not read your insurance policy, call your agent, and the
Gotcha.
agent will
Gotcha.
act as a gatekeeper and say, yeah, Jens, as a matter of fact, we have a new endorsement that we can tack on. It's $50 a year and it'll cover you. Here are the guidelines.
Right.
You have to blah 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 blah, but at least you're being proactive so that on the back end, if you've done nothing and you have a
Right.
claim, and they look into it and they say, well, what happened? Well, I had somebody stay in there, and then that snowballs into, they find out,
Right.
again, it's the insurance company's job is not to deny your claim. I know that's a big dirty thing out there, but they're not. The job is to help you out. And if you
Right.
have a contract. So
Mhm.
if all the things are in line, you're going to get paid. And
Right. Right.
so,
What was the other thing? Let's see. So in the auto policy world, we have uninsured motorists. They're
uh-huh.
required to get it by law, but we have a little line item that says uninsured motorist, $10,000 or something, whatever it is.
Yeah.
So in real estate world, a mortgage typically is the requirement to have an insurance policy.
Hmm.
But if I've got, a cheap unit or I'm a cash guy, there's nobody making me have an insurance policy. Is there a requirement? Is that, again, now I got to go back to the bylaws? Every resident shall have insurance? Or
Yeah.
is there an uninsured rider I can buy if the guy above me doesn't have insurance and I can buy some extra coverage? What
That
happens
is,
there?
I'm not aware of anything like that on the homeowner side of things or the fire
Okay.
side of things. Um, and to your point, it boils down to economics. I
Mhm.
ask people all the time, hey, so if your house burns down, why own my house? I don't need insurance. Okay, well, if it burns down, are you good? Are you have enough you have enough cash reserves to rebuild your house the way it is? And if they say
Mhm.
absolutely, and then the next question is, well, how about liability? What if your
Right.
dog rips someone's face off?
Right.
Do you have 10, 12, $15 million in the bank if they die and blah blah blah.
Mhm.
So there's all kinds of if you don't want to insure your assets, you sure as heck should insure against liability.
Gotcha.
So
Okay. All right. All right, here's the window replacement slide. So in
Yeah.
that upper right corner where you see the piece of plywood, I think that's covering a window opening. And so somebody did a bad window job, and that water is dripping all the way down the sheathing and siding. So the question is, the board says unit owners are responsible for replacing our own windows. If somebody on the third floor hires a poorly done contractor or a bad contractor and he doesn't do the job right, and it damages things on the common element or on the master policy side of things, it's a resident with a unit policy damaging common element master policy. Where do you see conflict, or how does that get sorted out?
This is just pure ugly. You've heard the phrase, the brown stuff rolls downhill.
Yeah.
Well, here's the biggest problem with what I'm looking at here. There's no coverage for anything like this. Because at least in most insurance policies, because this is not a named peril. In fact, it is a big fat exclusion in the in most policies. It'll say crappy workmanship is not a covered loss.
Right.
And so, and then the other thing is, you look at this picture, it's been going on for a long time. That this is not an acute issue. Think of medical issues. Is it an acute problem? Did you break your leg, or is it a chronic problem? You have arthritis. And insurance companies focus mainly on acute problems, not chronic problems. Chronic problems are maintenance issues, whether you know about them or not. And and you and I spoke earlier about potential precedents being set in the industry now to maybe go back to cover those things. Hey, I'm all for it, but just be careful what you ask for, because as governmental agencies and regulatory agencies start making insurance companies pay for this stuff, rates will go through the roof.
Rates will go up, and insurance companies will pull out, right? I mean, it's California's having a tough time.
Yeah.
We saw that in the condo world. We just can't get condo insurance. So
that's
sorry,
right.
we're not going to play. We're taking our ball and going home.
Right. Absolutely.
So, okay. Yeah.
So let's one more insuranceese issue, and it's proximate cause. The proximate cause of this damage in this picture is shoddy workmanship. Therefore, it's not covered, because who you want to go after is the sub that did the work. And now this is probably 10, 12 years old. That if that sub is still around, good luck with that. You know what I mean?
Right.
And so,
So what is your opinion of how a board can get to prevent this? And again, I can hear you saying bylaws and windows, and don't make your residents hang off the outside of the building and pound windows in, but I don't want to answer for you. But
no, you and I think are on the same page on this, and on emphatically do not allow your owners to replace the windows. In my personal opinion and in my experience, it is a structural thing. And if the association is in fact in charge of the structure outside the drywall, they want to have full control over how that's done.
Right.
And so and then if this happens, guess what? It's a board problem now, because they authorized ABC Windows to do it. The unit owner's off the hook, and now it's a board problem. Oh crap, I knew I shouldn't have hired that guy because blah. Now look at what we have here. And so,
the board made me do it. The board told me to do it. They made me
exactly. Don't. I mean, it's a structural. Again, in my experience, windows are a structural piece. You can have something in the bylaws, like if your knucklehead kid throws a baseball and breaks the window, the association will fix it, but then you're getting a bill.
Right.
You know what I mean? And so that kind of stuff.
Knuckleheads. Okay. That brings us to D&O policies. And this is directors and officers liability insurance. So it's designed to protect the people who serve or volunteer as officers of a company from personal loss. So when we have our volunteer board members, they are board members of typically a nonprofit corporation. And so this D&O policy, I'd say lots of boards are like, what's that? Oh, it sounds expensive. Doesn't our insurance cover that? Yeah. So is this a separate policy, or is this like a rider? Is this, how do you sell D&O insurance along with a master policy?
Well, the selling of it is easy when I tell you what it does.
Okay.
What it depends on the company. We
Mhm.
endorse a policy, with an endorsement. Some
Okay.
people don't offer it, so you'd have to go to a specialty products type of company that would offer just flat D&O. But here's
Mhm.
the deal. So it's the Matt and Jans Corporation, and we have 12 members.
Mhm.
And the name of the corporation is ABC Limited Liability or whatever it is, or
Mhm.
ABC Incorporated.
Mhm.
And we're a consulting agency and we give bad advice and it
Mhm.
financially harms someone. Well,
Mhm.
that person's attorney will now come after ABC Incorporated.
Mhm.
Well, in today's litigious world, they're not just going to name ABC Incorporation, they're going to name ABC Incorporation as well as all 12 board members. Well,
Mhm.
the insurance policy's named insured is ABC Incorporated. It's not ABC Incorporated and their board, it's just
Right.
ABC. So ABC gets the defense, but unless you have the D&O policy or endorsement, it's the personal defense that you want for each of your
Mhm.
board members. So
Yep.
the standalone policy defends the corporation, but you have the D&O endorsement, and now all of Matt and Jen's board members now get defense when they are also named in the lawsuit because
Right.
they made poor decisions to make this blah blah blah. Make
Yep.
sense?
Yep. So back to the fire, the board didn't maintain the fire sprinkler or whatever, and that's why
Correct.
it went off. So we're going to sue the
Correct.
board members. And we saw that in what the Florida collapse
Yeah.
claims and the board making poor decisions. Yeah, get that D&O policy.
Oh, yeah. You
Everybody
need
on
it. You
board.
need it. You need it.
Yeah,
Hopefully, you'll never have to use it.
right,
But
right.
it's not. It really doesn't have to be super expensive either. So,
Yeah, and we'll talk about that. This one of those things that's pretty cheap. D&O
well, it
policy. I
depends.
mean, based on reasonable sizes and
Yep.
relative, terms.
Depends on if it's endorsed or if it's standalone policy. I think the last one
Mhm.
I wrote was like, I don't know, $300 a year for $1 million.
Wow,
That's
that's
really not
great.
that bad.
That's not that bad at all. Yeah,
Yeah.
good. Okay, down to the HO6. This is the unit owner's policy, but we're also talking about that separate little nuance of loss assessment inside the
Yeah.
HO6.
Yeah.
And so let's talk about this.
Okay. Assessments, pretty simple. I mean, it's very
Mhm.
complex, but I try to make it as simple as possible. Couple different kinds of assessments. Boards, if you're listening, you'll get this, and unit owners, hopefully you haven't had one, but I like to use examples. You have a pool house and you're sitting out there one day and you're looking, God, the roof needs to be replaced on that. You haven't had a loss, but it look at like this is 15 years old, needs to be replaced. So you
Mhm.
go to the board and say, hey, you guys, the roof needs to be replaced. The board votes, they get a vote of the majority of the ownership, and they say, yeah, okay. And they don't want to dip into reserves, and so they will issue a special assessment to the
Mhm.
ownership because they're making improvements.
Right.
That's a special assessment that is not covered by insurance.
Mhm.
Door number two is same pool house, a fire burns the thing down, and your knucklehead insurance agent didn't have enough coverage on the pool house. So it's a $500,000 structure that only had 250,000 of coverage on it. So if
Mm.
you want to put it back to pre-loss condition, you are stuck now with doing a special assessment to the ownership if you so choose to put that building back like it was. So depending
Gotcha.
on the number, you can do the math. I went to Oregon State, so I have to use a calculator, but
Mm.
you you do the math and you figure, so I have $250,000 divided by the number of unit owners.
Right.
It can get costly. I've
Okay.
had 3 assessment claims in 23 years.
Mm.
12,000, 13,000, and 60,000.
Right. Yeah.
This coverage is pennies on the dollar,
Mm.
literally pennies. So
Okay.
get 75 to $100,000 if you can. For $75,000 with my company, it's $16 a year. And so
$16 a
a
year.
year, yeah, to buy
Okay.
75,000 bucks. Yeah, I mean
Let's
it's
repeat that
ridiculous.
for everybody one more time.
Yeah, 16, yeah,
$75,000.
$16 a year. And so
$16 a
if
year.
you get that, and if it's a liability loss, same thing. Somebody
Okay.
drowns in your pool and your
Right.
insurance agent told you that $1 million was enough. Well,
Mhm.
you know, that may not be enough. So the trigger here is the assessment coverage on your HO6 may come into play if there is a covered loss that happens.
So
If it's
the pool house burning down was the covered loss.
correct,
And the difference between what it cost to restore it and what it was actually insured for was $300,000 or 250.
yep,
And so that $250,000 and what the assessment is divided by 10, so it'll be 25K each or
Yep.
however you figure
Yep.
that out.
that's
And
right.
so because I have a $75,000 policy, it easily pays that 25 additional.
Yep, that's exactly
16
right.
bucks a year.
Yeah.
Jeez.
And so,
So-
trust me, the client of mine that got a $60,000, it's a nightmare, and I'm not going to get into it. I'm going to lie to you right now and tell you that we covered it just because it's better for the story. But if you can imagine getting a $60,000 bill on a Thursday
Right.
that you have to pay in 2 months, and you go, oh, I've got insurance for this, or let me call my insurance dork and see if I
Right.
got, that would be a good Thursday if you found out that you had coverage.
And then your neighbors don't like you because they're all grumbling about the assessment they have to pay. And you're like, what
Right.
assessment? Yes.
Exactly.
Okay.
Exactly.
So in our world, we're seeing this with our boards in the sense that we're seeing this with our unit owners, where we go through a, hidden water damage loss under the siding. It's complete strip and reclad. And everybody gets an assessment of 55,000 bucks a piece to do all this work. Those who had this, some 5 or 6 units come and they say, I've got this loss assessment insurance. This is paid for me. And then I'm like, holy smokes, we got to spread that news. Let's get that out to people.
Yeah.
Whatever. And so I'm getting into the timing question. And that's one of the 4th bullets of, obviously, back to the pool house on fire. You can't call and get insurance for fire insurance when it's burning or burned down.
You could try.
You could try.
Yeah, but no.
That would be
The answer is
fraud. That
no.
wouldn't be good.
You need to add the coverage before the loss occurs. So
Right.
to your point or your example, that's a huge gray area and just ugly. They find a bunch of damage behind the siding it's been happening for years. That's a tough one.
Okay.
Whether you have the assessment or not,
right,
or coverage or not, it may not be covered because it's a chronic problem. It's not an acute, a treated
that's
fall.
where I let the lawyers do their thing.
That's
and so
exactly right.
Something gets triggered. So, okay, now we got triggered.
Exactly.
So
right.
then we can be triggered or not, but yeah. Okay.
Yeah.
Okay. So
I didn't mean to trigger you just then. Sorry.
on the timing question,
Uh-huh.
at 16 bucks a year, just buy this stuff when you renew or buy your condo,
Oh
or
gosh. Yes.
tomorrow it ends in a Y. It's starting with Wednesday. Give
Yeah.
Matt a call.
Or call your agent. Yeah, call your agent and add it.
Call your agent. Yep.
Most policies come with $1,000. That's what the state said that when you write the policies, the vanilliness, they come with 1,000. Well,
okay, so that they have $1,000. So this is one of those things going from 1,000 to 75,000, 16 bucks.
Yeah.
Crazy.
Yeah.
Okay.
And again, that's with my company. It might be different with others, but you won't know
so
if you don't
that's the
ask.
segue. If you want to talk to Matt, talk to him. Here's his phone number, and here is his email address, or one of them. And he looks the same. It's not a 10-year-old earlier shot. No.
Well, my hair's a little bit more gray,
he's
actually.
tan. He just got back from
Yeah,
vacation. So there's Matt's information. He can help you with all the stuff. And if you found any of this information useful, run it by him. Again, I can talk buildings. Matt can talk insurance policies and coverage.
And I'm happy, real quickly, Jens, to if people want to review their policies and they can bring me a deck page and whether they come to my office or not, or whether they come to my company, that's okay. I'm happy to offer that, in as much as you offer a free 15-minute. I'm happy to look at them and say, hey, what's important to you? This is
free reviews.
Yep.
Fantastic. You guys heard it. Let me go back to there's his email. Email him when he says deck page. Does that stand for declarations page?
Yeah, sorry, insurance lingo. It's the thing that has your name and address and policy number and coverage limits and premium. Yeah.
Perfect. So there's his information again. Matt at mattmartin.biz.
It had to be something I could remember, Jens.
Yeah, I'm the same.
Oh, by the
Okay.
way, no one's asked the question yet, but yes, we still offer waterbed liability. I just wanted you to know that,
Oh
you know.
yeah. I remember that. Water
Yeah,
beds. Those are
exactly.
fantastic. What's the best
Exactly.
story about one of those
Oh
breaking?
God. Oh, I don't even know. I don't know if it's rated G or not. So, you know.
I just remember jumping on them when I was a
Uh-huh.
kid. They were
Oh yeah.
great. Yeah.
Oh yeah.
That probably popped them.
Hmm.
Okay, waterbeds. We're on to waterbeds. Let's see, we've got some, feel free to look in the chat. Brooke tells me there's no questions there. So our first question is brought to us by Phil. How should the HOA handle mechanical debris, i.e. screws, nails, bolts, connectors, metal junk, left on the flat top asphalt roof, typically from AC repairs or replacements, and people walk on digging into the roof, possibly causing a water leak down the road? Oh, that's a great question.
That's a great question. And I mean, I don't know, Jens, if you want to answer, and I have my own opinion about it, but go for it.
Right. Well, it's yeah, that would be kind of in our maintenance inspection. We'd be catching some of that, saying, hey, whatever sloppy Joe came here last time, let's get these things swept up. But now that it's poked through the roof, and maybe they just did that. They dropped so many screws, and when they're cleaning,
Yeah.
not cleaning up, but walking out, they drove some screws in. Yeah, that'd be an interesting one. I don't know. What's your take, man?
I would say that's a covered loss. But what
Mhm,
I'd also say is most of these companies, whether you have regular HVAC work done, have
mhm,
a contract and it says this is what we'll do and this is
mhm,
what you'll pay us. You
mhm.
make darn sure, sorry, that they have part of that contract that says
Mhm.
we will clean up after ourselves, and that's part of the contract. and
Gotcha.
that and that means we're not going to leave a bunch of crap on the flat roof because of what
Mhm.
you're exactly, Phil, what you're saying. It's a great question.
Right.
Got to hold these people accountable. And so when they say, oh, here, sign our contract, I would say, not so fast. Let me make sure that cleanup is in your contract, and if it's not, you put it in there,
Right.
because I'm going to be coming after you down the road if because if you left a mess and it caused a problem, you're in breach of contract, period.
Right. Right. I don't know how many I see of the dropping the screw gun. Here's
Yeah.
a punch through the membrane in the shape of a Phillips driver bit. And it's like, well, they clearly dropped their screw gun and whoops, pick it up quick. Don't leave that on the roof.
Right.
Okay. Anonymous asks, do you have any insights about deductibles for plumbing projects? And so, plumbing insights about deductibles for plumbing projects. Plumbing projects, we're doing a bunch of those. We just had a couple of recent webinars on that of retrofitting the plumbing from, old leaky stuff to good new stuff. But the losses are what starts triggering. We start getting 3 or 4 of these units that pop, and we pay 35K per, flood. And we're getting tired of paying 150K before we then get into the plumbing replacement job. I don't have enough information there about the question. But plumbing would be a covered loss if we had what type of plumbing problem, Matt?
Well, pipes break, they get old, they
Mhm,
break, fittings break, somebody
mhm,
pounds a nail into the wall to hang a picture, believe it or not, they hit a
mhm.
pipe.
Yeah.
The biggest, I mean, obviously in this region, thank God, not a lot, but freezing pipes,
Mhm.
and insurance policies will, if there's direct physical loss to the plumbing, like a car ran into it,
Right.
and the thing, yeah, then we replace the plumbing. But if it's just old and a fitting breaks or somebody drives it, actually driving a nail into it is direct physical loss, so the plumbing would actually be replaced there. But if it just fails,
Mhm,
there will cover the resulting damage, but the
mhm.
plumbing itself, nah. If it just fails, that's not the intent of the policy.
Gotcha. Okay. Yep. All right. Going once, going twice on the questions. That's all I see. So let's jump into some giveaways here.
Hang on just a second. There's one more. We filed a roofing claim through our master policy, but it got denied. The
Oh,
adjuster
it
was wrong
just
on
came up.
several items of our roof. Age, how good are the adjusters usually, and should we do? I love that question, because just because one knucklehead comes out to your place and says, nope, we're not doing it, I would never stop there. I would go to
Okay.
your agent and say, hey, I need help here. Help me understand why this got denied. There are reasons to deny claims, but
Mhm.
if he's wrong on, like you said, if the person is wrong on age and my God, if he can't even tell what type the roof is, come on.
Mhm.
You think they have enough information to settle or deny a claim? I would
So
say no.
what do you do there? Do you call again your agent or their manager? I don't like the denial. I think they're too young. They
Yep.
don't have the experience to talk
Yep.
about this. I think they're wrong. So
Yeah.
you ask for
And
a
yeah,
redo. Okay.
you call your agent and get them on board. You maybe call the manager and you say, show me in the policy where it
Right.
says this is, show me the exclusion, show me the, what's covered and what's not part of the policy.
Mhm.
And then, I might be mad, but at least I'll know that it's true. But
Gotcha.
again, if you can identify the age or the type of roofing it is, my God, how do you have enough moxie to deny a claim?
Right. Right.
I'd
Yep.
be all over that person and saying, what do you mean? You help me understand why you're denying it. And then I'll
Right.
try to explain it to my customer.
Right. Gotcha.
I hope
Okay.
that's helpful. I don't know.
No, I think so. Yeah. Yep. Absolutely. Oh, Angela, we got one last one here. Ever heard of roof shingles melting? Ooh, I've heard of them curling, buckling, getting brittle. We've had melting between roof shingles, a sloped roof and a flat roof. When you have PVC touching the asphalt and they don't get along, they argue, and it causes the asphalt to melt out of them. And so, any other melting that you're familiar with, Matt?
Just why they don't use asphalt shingles in Arizona, because they do melt in the sun, but not in this region. No, never
Okay.
have come across that. I've worked in Oregon, Washington, California,
Mhm.
and even there, no, I haven't. I mean, that's an interesting question. I haven't heard of that.
Okay. All right. Got some good questions. Going once, going twice. I see some of these little dots moving.
Phil had another follow-up question.
It
Um,
was kind of the owner didn't inspect the roof after the HC repair was done and the owner moved. And yeah. So,
sure. Yeah,
yep. Yep.
it
And then
happens. And
letting people install their own heat pumps, pumping, puncturing through the roof, or letting them put in their own skylights and then they move. And yeah, you got a big mess on
yeah,
the roof. So,
yep, absolutely. Make it contractual so that, yeah, don't let the owners do that stuff without supervision. Not that, I mean, sure, they're fine people, but to protect the board,
right.
that's, yeah. So,
Okay. Okay, Scott. Oh, I'm the author of the question of the day.
hey,
So
right on,
thank you.
Scott.
Yeah. So to tie it all together, who has the expertise to be the clerk of the works? Yeah, good question. The we do as a consultant to talk about the construction issues. We would be leaning on a insurance expert. Matt could probably fill that role if he did consulting work, but that should be covered, that shouldn't be covered. And then I would pull in at least a lawyer on the master policy side to say, keeping track of who is not playing along. And the lawyers, they've got all sorts of timers. They're running letters. They demand answers within X number of hours. And if they don't get it, you're in violation. And so they're setting up bad faith claims. And so I'll take the lane of here's what needs to happen in every single one of these units to get it fixed and get these people back in, and then direct the contractors to do that. But yeah, having an insurance expert with you would be great. So
Yeah,
Matt, do you ever getting called into any of that consulting work?
all the time, all the
Oh,
time.
okay. Okay.
Like, well, let me rephrase. There haven't been on the larger losses I have been, and the
Mhm.
smaller ones are relatively easy. Um, but to the question writer is
Mhm.
also in the association board is to assign someone just to be a contact person for the unit
Right.
owners and for,
Mhm.
and again, back to the question a long time ago, which was, what do you do Well,
Right.
if it's big, call the master policy right now. And then
Right.
talk to all the unit owners, encourage them to file claims if it's a decent loss. And then the master policy claims people should be talking to the unit owner policy people and working together. I mean, there shouldn't be a
Okay.
ton to discuss.
Right.
What? As long as the bylaws are are good.
Right. So then master policy, who pays for all these consultants and lawyers to wrangle it? Is it typically costs of the loss?
No association. I mean,
Okay.
that's my feeling, unless you have some kind of a funky thing in your master policy that I'm not aware of that would cover that kind of stuff, legal representation, all that, which I don't think you do. I mean,
Maybe
I've
not,
never seen it.
maybe not
Yeah.
legal, but we need that clerk of the works. They're really a
Yeah.
important function. It should
Yep.
be covered. If not
Yeah.
for the fire, we wouldn't need that, right?
In a perfect world, in a perfect world, the claims person from the master policy
Should figure that out.
would be that person.
Oh, would be that person. Okay.
In a perfect world, that's right. Because again, what's their job? Is to protect the association. The association is the named insured. And do they want to pay out more than they need to contractually? No.
Mhm. Okay.
They shouldn't.
And with-
Again, as long as the bylaws are good and it spells out who pays for what, it should be
Right.
easy.
Right.
You know?
Bingo. So pay to do it in front of time. Scott sneaks one more question on the line.
Yeah.
We are 10 minutes over, but let's answer this one because it was such a good question. So remember the negligent plumber, he has insurance. Shouldn't the master policy through subrogation never be paying anything? Well, the term subrogation, my understanding of it means I'm going to chase you to get reimbursed for what I paid. And so perhaps the plumber's insurance will step up and pay all these checks straight. If the master policy needs to pay some things, they will be seeking reimbursement. But yeah, everybody gets involved and comes to the table. Who pays what first? That's your advocate on your policy. So is that?
Yeah, that's right. Typically, subrogation is a fancy insurance word for collections. That's all it is.
Gotcha.
Is we paid out on your behalf. We want our money back. In a
Right.
third party claim situation like that, where you're going after the
Mhm.
plumber's insurance company, the plumbers, they're not going to manage the bills. They're going
Right.
to talk to the master policy company and say, hey, when you're done, send us a subrogation packet with all the
Gotcha.
bills and everything spelled out. They are
Yep.
not going to manage bill by bill by bill by bill.
Yep.
That's why you have the first party coverage in place.
Got it. Okay. All right. Good questions, guys. Now giveaways. We're gonna move on. Giveaways. So the coffee box giveaway. Very nice. Very nice. I want number 6. So Brooke, the producer, is going to figure out who number 6 is in our live participants, and she'll reach out to you. So you can't pick number 6, Matt.
All right.
And I think you have 2 to give away. So
I would say participant number 9 gets this handsome
that's a pretty nice
black
plaid.
and red and plaid
Yeah.
blanket for a grassy knoll.
Mhm.
And then probably on this beautiful red and white checked blanket, I would suggest maybe participant number 4 would get this one.
Oh, fantastic. 4 and 9, get blankets.
Exactly.
All right. Thank you very much. Okay, so closing, did you remember or did you know we have free resources for board and managers? Learn.j2consultants.com/resources. And we're back at the end of each month. So last Tuesday of every month, scan here, invite your friends, tell it out, forward it out. You're going to get the replay. You can forward it to the rest of your board and say, hey, watch this. Let's discuss it at the next meeting. There's some things we should be talking about. And thank you, Matt. This was super informative. If you've got insurance questions, reach direct out to Matt. Here's his contact information. And so you have been a pleasure to have on the show. So thank you very much.
And I'm happy to meet with boards, whether
Yep.
I do your insurance or not.
And
If I'm in town, I'm happy to show up and, talk about insurance because it's so enlightening.
right. Well, and the free review. So folks,
Absolutely.
take him up on his offer there. So,
Absolutely.
all right. That's it. So thank you very much. January is a wrap.
Have a good evening, everyone.
Good evening. All right. See ya.